This is the type of quarter that makes you realize why Post Holdings spun off BellRing Brands into its own publicly traded company. By now, you should know that BellRing Brands, the portfolio previously known as Post Holdings Active Nutrition, is publicly traded under the stock ticker BRBR. And while I'm going to be covering the financial data around the fiscal 2020 Q1 report that was just released by BellRing Brands, it's only going to be used lightly to tell a bigger story around the growth strategies and risks associated with BellRing Brands, but also to give you guys some deeper competitive insights. Just as like a short summary, if you're not too aware of BellRing Brands and what kind of consumer brands are within there, the revenue mostly comes from Premier Protein. You also have Dymatize Nutrition, you have Powerbar, Supreme Nutrition, and Joint Juice. So let's just kind of start real quick on top line revenue, just so you can understand the size of BellRing Brands had for the fiscal 2020 Q1. They had net sales of $244 million. That was actually up 31.3% year over year. And why I opened with the statement that I did around this is the reason why Post Holdings spun off BellRing Brands into its own company is that growth rate, the 31.3% plus, I think 30% compounded annual growth for the last several years is extremely impressive. But if you consider BellRing Brands or Post Holdings Active Nutrition, the segment within a larger Post Holdings, it was only about, I think, 15 or 20% of the total revenue. So that 30% year over year growth rate would be muted by maybe some low performing other segments within Post Holdings, maybe like their cereal brands. So in this case, and a lot of times when you have maybe a segment of your business that is outgrowing the rest of more legacy segments within your business, sometimes it makes more sense to just spin it off because the sum of the individual parts are actually worth more than just the sum of all the parts. So this is one of those common things where they thought this particular portfolio piece, the segment piece, the BellRing Brands, which it's now known as, was worth more in the open market by itself. In previous videos on BellRing Brands or Post Holdings Active Nutrition, I have constantly talked around this kind of like $1 billion in net sales number. Just kind of, are they going to reach this in the next year? I've kind of talked about fiscal year 2020 as my target date for this portfolio to hit $1 billion in net sales. And for me, why I kind of felt good about taking that risk, even though they needed to grow pretty considerable from their fiscal year 19's revenue, I think somewhere around 20 to 25% they needed to grow year over year. I've been seeing, some of the tracked data, sales channel tracked data from the store level, was very confident in terms of that number. Also, my supply side manufacturing contacts that specialize or have a division that does RTD, protein beverages, there has been additional capacity added to the system overall in 2020. Maybe not at the level that it needs to be, but it's definitely getting better. So I wasn't as concerned with the supply constraints that BellRing Brands dealt with in fiscal year 19. So even with the growth rate and them building up some of their inventory over the back half of fiscal year 19, I thought they were going to be set up perfectly for 2020 being the year that they hit the net sales $1 billion mark. And if you look at the expectations, the earnings outlook that they've put out on the top end of their expectations, they are expecting to hit $1 billion in net sales in fiscal year 2020. But let's kind of take a little bit deeper of a look at kind of the product sales and by brand sales, just some kind of insights here. Talked about Premier Protein being their A brand, their A consumer brand within their portfolio. This is far and away the most important brand in their portfolio. And they saw net sales up 45% year over year in the Premier Protein brand. Like I said before, this is where some of the supply constraints were happening on the first quarter of fiscal year 2019. So this number is impressive, but you have to consider kind of comparability in terms of a kind of a weak quarter. Volumes were up 38%, and they're saying that's mostly attributable to distribution gains. Second biggest brand in the portfolio is Dymatize Nutrition. Dymatize Nutrition was down on a net sales perspective, 9.9% year over year. They're saying a lot of that is coming down to the big sell-in that happened from like comparable quarter in fiscal year 19, and they were seeing volumes down 4%. On the PowerBar brand, they had net sales down 12% and volumes down 28. And that's because they've basically just cut all SKUs in the US except for a few that they think are selling really well. So those numbers are going to be continuously kind of going down until they figure out what is actually usable within the PowerBar US operations products and which ones make sense for us to continuously invest in. Now, by product, the sales are mostly skewed towards the protein RTD beverages. 82% of their sales come from that product category. That's up 4% if you consider what the number was in fiscal year 19, the whole fiscal year 19. Powder business is about 12% of their business in this first quarter. That's down 2% considering the whole fiscal year of 2019. And then nutritional bars is 6%, which is down 1% from fiscal year 2019. So like I said, this is by far very much a RTD protein beverage portfolio at this time. And that's not necessarily a bad thing. I'll talk a little bit about some risk factors associated with that a little bit later in this video, but just talking about like macro trends that are going on in the market right now, you have this idea of like convenient nutrition growing, according to Nielsen, at a little over 5% year over year. And then within that, if you're talking about just like the beverage or liquid category of these convenient nutrition products, that's up a little bit over 7% year over year. So you have just the sales data supporting the positioning of BellRing Brands. And just overall in the market, you have just some more interest in protein overall, convenience in terms of like nutritional or active nutrition category, better for you type of CPG. And then you also just have snacking kind of really driving things. So having a protein shake is a little bit different than having a meal. So all these kind of things are working in the benefit of BellRing Brands. Now, all that sales data is great, but are they actually managing their business from the cost side? You did see a 250 basis point increase, or about 2.5% of operating margin in which they grew. So they are managing their business much better with the higher sales number. But let's jump back to the risk that I was talking about, being extremely reliant on the RTD protein beverages. Now, if we're talking about all the risks in which BellRing Brands has to kind of consider, this is by far the one that matters the most. This is the most material risk out there. The vast majority of the sales within BellRing Brands is a part of these protein RTD beverages, and they mostly come from one brand, which is the Premier Protein brand. And far and away, it comes from one channel and even one customer within that channel. So you have a lot of risks in terms of needing to diversify the business a little bit more. So what we're talking about here with just kind of maybe some sub risks, they are doing their manufacturing in third-party contract manufacturers. They are doing a lot of their manufacturing with, I believe, one partner, two facilities, one facility being very much where the majority, I think over 50% of their production goes through. So just that alone is obviously a sub risk. Also, just the overall capacity for these types of beverages and the demand coming from new brands coming online wanting to produce similar products is going to create some potential issues. They also have limited input suppliers for their current product portfolio. Also, some issues with limited suppliers for the packaging. So Tetra Pak being a very major part of their business. They need to make sure that they manage those sub risks. Talked about the dominant sales channel being kind of singular. And then the main input costs associated with these RTD protein beverages is milk proteins. That's attached to a very attractive global commodity. And then outside of just the product specific kind of sub risks, it's also playing within or positioning itself within the bigger like active nutrition category category, which is extremely competitive. You guys hear me talk about that all the time. And not only competitive on just substitutes, somebody could easily take a ready-to-mix powder and substitute for this ready-to-drink protein beverage, but the high growth, kind of fast moving sports nutrition brands are looking at this space and saying, RTD protein beverages, there's not all that many players comparable to some of the other categories. Let's jump in. Let's kind of use our momentum to get us into maybe some of these bigger channels with product categories that fit better into those bigger sales channels. So you are seeing that kind of come to fruition as well. But consumers, being that they're really focused on discoverability and they're interested in trying new products and all kinds of other things, they have to assume that they're going to lose some customers. Maybe they'll come back to them, but they're going to maybe lose them through one or two purchase cycles with all these new entrants coming into the market. Far and away, this is kind of the biggest risk in general. I mean, there are other risks within the BellRing Brands portfolio, but if I am attacking one and one only and really focusing on the most material one, it's going to be the reliance on the RTD protein beverages. Now, this is the part of the video that I normally run through all the opportunities and talk about all the different strategies in which I would kind of work on at BellRing Brands if I was their consultant, and kind of look at all the different sides of the business. But I'm going to kind of shift and change that a little bit. If you guys do want to see what that looks like and a bunch of strategies and opportunities in which I believe are still extremely valid, click the pop-up here from the video I did about 3 months ago, the fiscal 2019 report. All of those are still extremely valid. I gave a bunch of detail in that. But instead, this time I want to just focus around more of the product movements lately, maybe some opportunities in which they can focus on the product side of things, innovations, or maybe just some strategies that might help them a little bit. And I'm only going to be focusing on kind of the three biggest brands in their portfolio: Premier Protein, Dymatize Nutrition, and Powerbar. And I'm going to kind of go backwards. So I saved Premier Protein, the biggest one, for last, just to create a little suspense here. But Powerbar in general, I'll be completely honest, this is a brand in the US that I don't pay that much attention to anymore. It has completely fallen off the map for me. So I don't tend to focus all that much. I had to actually look up their product offerings were. I've obviously followed some of the commentary on the earnings reports and the conference calls saying that we're going to be cutting SKUs, and we've cut SKUs. And that's what I was expecting. When I went on their direct-to-consumer site, all I saw was their Protein Plus SKU in the US, which was a little bit more drastic than I thought. I did look at other marketplaces like an Amazon or a Walmart, and I saw a bunch of other SKUs. I imagine probably that is just some old inventory that they're trying to sell through. And then on the EU side, which is actually where the Powerbar brand still has some brand equity and it's got some sell-through and velocities, I think there was maybe mid to high single-digit growth year over year. In the EU side, you still had a ton of different variants and SKUs and products on that site that were ready to mix, gels and bars and a bunch of other things. So my suggestion for this brand, the Powerbar brand, I'll talk about the US first and just kind of say that I don't necessarily know the sell-through rates of all their products, but it seems like they're really kind of focusing on the one that they believe is best. I think that bar is best suited, the Protein Plus Powerbar is best suited for kind of the lower end of the protein bar market. I would go more towards the economical price point on this one in some of the food, drug, mass convenient channels, and also maybe create a smaller version of this product for dollar channel, like Dollar General or the Dollar Tree family of brands, and create a product for them. This might still have some brand equity. The Powerbar brand might have some equity still with those types of customers. But I honestly wouldn't be wasting too much of my resources on the US side. It sounds like the EU side seems to be still doing pretty well. So I would probably cut down on some of the SKUs, try to zero in on what you're really good at and really focus on delivering that value to the customers there. But probably got a runway still of mid to high single digits within that area, as long as you continuously reinforce and refine the brand's position and the brand's value for that market. Now, moving into Dymatize, I kind of break this down again into kind of two parts. The US one, SKUs overall, I mean, I think, variants and products and sizes and all those types of things. I mean, there's actually quite a bit of them, but far and away, I'm going to guess that majority of the sales are going through the ISO 100 product family. Now on the international side, I think you got some runway left for that brand. I still don't necessarily think of it as a legacy brand like I do a lot of the other ones. So I think you have a lot more years of runway in the international markets. I don't know if they have specific international SKUs, product SKUs that are different than the US, because a lot of the product SKUs in the US market are a little bit costly for the international customers. The ISO 100 being kind of your A SKU is an expensive protein, where a lot of the international markets are looking to trade down right now because of the strong dollar. So maybe look at just like a product mix on that side. Just moving into kind of suggestions for Dymatize Nutrition. I'm kind of confused on where it stands in the market in 2020. I spent a lot of time in the sports nutrition category. And for me, I don't necessarily know where like Dymatize wants to sit within the market. You have a mixed match of imagery. You have a lot of different types of products. To me, I don't necessarily think they're doing one thing extremely well. Outside of the ISO 100 kind of product portfolio, that kind of product name, that could be something big, something they can go all in on. I know some of their channel strategy right now is really focused on e-commerce, food, drug, mass, and club. So some of their product categories and product offerings and things, I don't know if they necessarily fit into that strategy, or at least perfectly fit into that strategy. I just feel like overall there's just a lack of alignment that's happening in this brand. There's tons of resistance factors that are probably happening in this brand because they're not properly aligned in all of their strategies. I also hear that Post Holdings is going to allow some of the cereal IP to be used in Dymatize Nutrition products. I mean, that's interesting. That's on trend. That is something that should be a strategy that they used or have used already. So we'll kind of see what that does in the market. I'm not necessarily sure. I think the storytelling and the way that they execute that launch is going to be a big deal. I don't necessarily think just slapping on a Fruity Pebbles or something like that is going to just drastically change their sales trajectory. But I think if executed correctly, it can have a meaningful impact on their business, especially if you're considering it being placed in some of the food, drug, mass convenience areas that people know the Fruity Pebbles name extremely well. And then last, but certainly not least, the biggest part of BellRing Brands, the Premier Protein brand. Kind of walking through some recent product launches. They did do a limited edition seasonal flavor that they went just straight e-commerce on that with the pumpkin spice. Their commentary is that it did pretty well. The test went really well. So I'd expect some similar e-commerce tests and then probably rollouts maybe over the next year. They also launched a cafe latte flavor. From what they said on the call, it did extremely well. It's doing extremely well. It's already gaining some distribution points and things across some of their major retail partners. They're saying it's the third most popular flavor in a lot of those channels. And this kind of plays off some of the energy and kind of making a more complete, convenient product overall. If you have protein, you also have an energy component as well. It kind of just mashes up a bunch of things that are convenient for customers. And they also launched a Premier Protein beverage with oats. I don't have any issue with this product. My public comments probably look different. And that's mostly because I thought they should go in a different direction for their next kind of big product launch or extension. So this idea on its face value in a vacuum is not that bad. I think that I was just kind of really hoping that it was going to be more towards, plant-based or something like a keto offering. So my suggestions for the team on the Premier Protein name, I give them a lot of flack, unfortunately, because of the speed of innovation. But I also understand that slow and steady is going to win the race here. And a few reasons why I believe that is that this is BellRing Brands' most valuable asset. This is their star. They need to be thoughtful in the way that they approach their product development map. Secondly, they haven't even really hit their stride in household penetrations in terms of this category or them as a brand. So they still have a lot of runway here to kind of really grow their existing product offerings. They also just started a national advertising campaign on TV and things like that. So that you really need to kind of see how that goes, especially with just kind of your base product offerings. That's the only way you're going to really get to see the lift and the indicators in which this is working. You don't want to kind of throw a bunch of gasoline in a bunch of different directions because you don't know which one is kind of causing the benefit and maybe causing some resistance. So you kind of have to see how that goes as well. They also have not really diversified their distribution strategy to the level that they're not kind of relying on just kind of one channel. And I totally understand that that one channel is extremely strong. They also added an additional placement in that channel. So I totally get why they're going kind of all in and deep into that one. But you got to think about that there's going to be some more diversification. You're going to have to see how that goes as well with some of the existing product offerings. And then the international runway is massive. I don't even think they've hit the tip of the iceberg at this point with their international business. They're going to have to really think about outside of the North American market. Canada, they said, has gotten a ton of growth in terms of that area. I think they've just gotten some onboarding for Mexico. But after you move outside of North America, you need to start kind of dialing in some of your in-country production. And that's probably really holding things back because shipping over these products to distributors and not producing in-country is kind of a death wish in terms of now the competition in country in a lot of these regions, the EU and things of that nature. So they're going to need to really lean on probably some of the existing infrastructure with the Powerbar business and kind of figure out how they want to approach that part of international business. That being said, and me understanding that the slow and steady wins the race type of approach is probably best. The risk analysis in terms of internally is probably saying we have to really watch how our brand equity is getting built and sustained. And we haven't really even hit our stride yet with this. Why start to diversify and why start to maybe create some customer perception things where they're not necessarily knowing what you are, like what is the Premier Protein brand. I don't think there's any question at this point, but maybe you start to have that when you diversify and create brand extensions and things of that nature. So that being said, I still think those macro trends, product trends in terms of, particularly plant-based, but also maybe something like a keto or kind of shifting some of the protein sources to something that is maybe like an egg or something like that. I think that those are not going away. And because of that, BellRing Brands needs to kind of consider, is there other options out here? Should they go out and purchase somebody? I've talked about it in a ton of different videos. I've talked about names. You guys can jump back and read those things. This is just a blanket statement saying if you are not comfortable with utilizing the Premier Protein brand name for whatever reason, or this is going to be something that comes out in a year or two because you're going to want to see the market kind of move a little bit longer, it might be best to look at another name and utilize their name as a way to enter those markets and get a understanding of how those markets, those customers work. Thank you so much for watching this video. If you want to help support me, make sure you guys hit that thumbs up button on this video. If this is the first time you've been introduced to my videos, would love for you guys to be a part of my community by subscribing to my channel. I upload several videos just like this weekly. And if you guys want to connect further outside of this platform, I do include all of my social media links down below. I just want to thank you guys again for your time. Hopefully I gave you some value in return, and we'll see you guys on the next video.